Good morning, everyone. It is Thursday, January 27th, and this is Morning Market Movers, where we look at hot spots in the markets for the day, and we do some live analysis for day trading. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things to talk about today. We've got, following the Fed's announcement, which we were expecting, that they're going to start raising interest rates in March, that indication, and they're doing one last purchase of assets. And after that, they are no longer going to be purchasing assets. Then the question is, how do they take those off of their balance sheet? Do they let those assets just run out and come off the balance sheet? Are they ever going to sell them? I think the door is open on that still a bit. What have we seen? We've seen dollar strength, and we're going to take a peek at the dollar. I mean, of course, if the U.S. is going to start raising interest rates, you would expect to see dollar strength. Raising interest rate environment, we're seeing gold and silver get hammered, right? I mean, they're not performing assets in that you don't generate returns from gold and silver. So when the U.S. as you start to raise rates, it's going to make those assets look a little less attractive. And of course, we're also going to talk about equities. We're in the middle of earnings season, and we've had some companies are doing well, some are struggling a little bit. And McDonald's, for instance, came out this morning, missed a little bit. So McDonald's a little weaker and that's going to affect indices a little differently. We do have Apple earnings after the close today. That's definitely going to be something that could potentially impact the NASDAQ index. All right, before we jump into all the analysis, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. We are going to start off over at the dollar. You could see, and this is the dollar yen, and you could see the dollar just absolutely took off yesterday. Just woo, to the moon. You're seeing a similar move. Here's the euro US dollar. But of course, the US dollar's in the second position here, straight to the floor, just cratered. So things that we would expect to see. Brian, I'm actually going to flip it over to you, and you could take us through some of the movement in the dollar, because that's definitely something that's been in play. And then I think that is distinctly impacted gold and silver. We'll jump over there before we finish up with equities.
Sure. Yeah, a lot has happened in the last 24 hours, obviously. A little bit we telegraphed from yesterday, and we talked about, what was coming. And again, there's a lot of different stories out there in the last 24 hours, and it'll be interesting to see how they play out today. Lately we've been talking about currencies have been flat. Obviously, right now, if you look at the 24-hour pip change in all the currencies, euro dollar down 133, pound dollar down 143, dollar yen up 113, dollar Swiss 109, which is over double the ATR, dollar CAD up 116, Aussie dollar down 107. Told you guys year 2022 would be the year of the currencies as everybody starts raising. This is exactly what we're talking about. And they didn't even raise. They just said that, yep, we're raising in March. Yesterday, one of the things we said, it doesn't matter if they raise it or they telegraph when the raise is coming, the market has to adjust. And this is the market adjustment. Stack on top of that, we have advanced GDP numbers coming in, not only an adjustment from previous, but then they blew the numbers out. So yeah, it's one of those things. A lot of times when you see the previous adjusted upwards, the actual tends to be less, because again, the forecast is right, but when you make the adjustment, the actual percentage is different. Not only did they adjust higher on the GDP, but then the actual came in even higher than the forecast. So it was kind of like a double. Durable goods are down a little bit, but overall, again, that's money. As soon as you take transportation out, it's dead flat. And transportation is really going to be the name of the game. Actually, McDonald's, you mentioned McDonald's miss. What was interesting about McDonald's, the reason why they said they miss is because inflation due to transportation. Very interesting. The reason why they're doing well, though, is because of the digitalization of McDonald's. And if you don't know what that is, McDonald's is an app now. There's a rewards program. You get free stuff. If you buy everything on the app, pull in, they literally bring it out to you. So remember we talked about automation and removing people from the chain? That's exactly what they've done now.
Yeah, more efficient. Easier to track. That rewards program is actually very clever too. I have to tell you.
They said 25% of their business now is being done through the app. So, within 1 year, actually, I guess it started. This article says July. And again, after your first order, you get free McChickens, free vanilla shakes, free hash browns. I mean, who doesn't like hash browns? And then you get codes all the time for things. But again, remember, it used to be you walk into a store, which again, nobody wants to walk in anymore. You got to talk to a person. Hopefully they don't screw your order up. And then they put the ordering window in there. And again, that increased, the popularity of it. Now you don't even need to go inside and you don't have to wait in that long drive-through menu. You're literally on the way, you hit it on your phone and boom, they bring it right out. That's even faster. But what it does is it's eliminating people from that chain. So we said this is the way that it's going. It's going that way. So it'll be interesting to hear what Apple has to say later on today, because this is right in Apple's wheelhouse. Smartphones, iPhones drive those numbers. They've had some kind of hiccups left and right. So, but anyway, from yesterday, FOMC was obviously the big news. And anytime that we see any of the countries raising, we should see basically the equivalent response. And it's been straight up dollar today. There's what the dollar looks like. You guys may wonder, what is this? That's FOMC. And isn't that funny how they said they're going to raise it and immediately drop down? And what's funny about this is that just happens to be a 4-hour level on the dollar. We talk about 4-hour levels. Raising interest rates is a big deal, but it literally, everybody that saw that and said you're raising it and hit the buy button, guess what happens? They've lost a lot of their accounts yesterday if they were trying to play against the dollar. Very, very common. Again, it's an easy way to wash out people that are reacting afterwards. But look at this. Get it cheap and then take off. So any of the currencies look the same. Aussie dollar basically straight down. Euro dollar again straight down. Here's where the news came in from yesterday. A little bit of a pop and then just collapsed. It's very, very telegraphed. The only thing that would have made this difficult, again, right here, you can see it. It literally. We talked about this yesterday too. You can see that it pulled back up right into the fib level, right around that 50% is where those sellers were in. Again, it's a level we need to mark off for next time also, which is approximately around 135.12. So again, keep that on there. We are approaching a level just a little bit lower. It's a nice little pop off of it. I wouldn't be surprised if we have some profit taking coming in. Remember, at this point, the news came out yesterday, right? Yesterday afternoon. Now, every session, if we open the U.S. session now, every session has now gotten to react to the dollar getting stronger. Now, rising interest rates is not your typical kind of parabolic move. It is a fundamental change in the way that things are being done. But remember, they haven't raised it yet. It's just that it's coming. So again, the dollar is preparing. What I mean by that and why that's important is because the equities are all up. The equities have not crashed yet because they still have another month, 2 months of this type of environment. They know it's there, but they still have 2 months of earning power and all this with cheap lending, and there's a lot of time to do things. It's not officially here yet. But again, you're going to see it in things like the dollar. And again, there's some reversals available. But things like gold and silver. So I want to talk about gold. Remember, gold is a hedge for inflation. Okay, it's kind of like a seatbelt. If you put your seatbelt on after you get in a car accident, it doesn't do anything. Okay, hedging is what you do beforehand. It's for protection. Everybody out there that's talking now about, man, it's a great time to get in gold or rising interest rates has no idea what they're talking about. You rise interest, you want to get in when you're in an environment of raising inflation or rising inflation. That's when you get into gold to maintain your buying power. Now that they're crushing inflation, you can see that they're also crushing gold, and we're literally back at 1800 again, right? We were at 1850 yesterday. Actually, we touched into 1854, and now we're breaking through 1800 again to the downside. Silver looks even worse. Silver is down 2.6%. You can see right here is where it pulled back up again. We talked about that one level, and again, 24 was kind of the linchpin for this one. Very, very easy zone. You can see that there was the tops right in here. Again, touched it here, touch it here, touch it here. 24 was the backstop on it. There's FOMC. Did they do anything? Nope. But are we going to? Yup. And then boom, crash it all the way back down from really, 23.98, and now we're all the way down into 23.89. So over $1 to the downside just from that time frame. So
23.
And let's say right now, silver's target is a little bit lower. There's definitely some buyers coming in at 22.78, but 22.66 is kind of where my downward target is. And will it hold there? There's not really a lot of a reason to hold it. All the people that are using this as a hedge for inflation, guess what? It's it's just not there. Again, they're in the active process of crushing inflation. So I would say this is still probably to the downside. Natural gas is pulling back a little bit, but I think equities are the important ones to talk about. That all the equities technically right now are in the green and kind of rallying back. And there was, this is where FOMC came in. There was a drop down, but was it an absolute collapse? No. But again, knowing that it's coming is a big deal. And all we did was we saw it come down, and now it's starting to rally back again. The VIX is down 5.8%. Now that FOMC is out, they can remove that unknown volatility from the markets.
Right.
Really, the only volatility exists right now is Russia. And again, it's sitting down here. Russia, considers war with Ukraine as unthinkable, right? And it's great because in the ever bipolarness of Russia, it literally goes back and forth, right? Russia considers war with the Ukraine as unthinkable. So that means that you don't need 100,000 troops at the border. That's purely for your protection.
It's unthinkable that people are going to resist if you invade them. I'm not sure what he means.
Yeah, yeah. And every headline is different. The one I got earlier today was that basically NATO has said we're not changing our stance whatsoever, and Russia said that this is what they sent back to us was really they didn't listen to any of our demands, and now we have to there needs to be a serious conversation. Again, when both sides are sending troops to the border, I'm not sure why that's not a serious discussion, but that's really the last little major kind of thing out there that we don't know about. I mean, we know Omicron exists. We know that everybody is basically going to get Omicron at this point. We know that everybody is downgrading from a pandemic back to an endemic. Everybody is now convinced that it's going to be just like the flu, so we can remove that. We know inflation is going crazy. We know that advanced GDP, we're back. I mean, 6.9 is a huge figure, especially a double-double like this. This is showing that the economy is rolling pretty well, right? And consumer confidence isn't as high as expected. But right now, there's absolutely no reason not to raise it. The longer they wait, and again, March is wonderful, but that's another month and a half from now. We're going to see a bit more inflation come through as well, and it's only going to hurt people even more. So this inaction, eventually, they're paying the price for it now. Yeah, I mean, when everybody's saying inflation is hurting us, this is a big year for politics. Every single one of these companies that is able to go back and say that, yeah, our profits were down because inflation is it's way too out of hand. It's all going to come back to bite them. Just between boosters and the language out there, everybody's going to know that inflation has been such a big deal. And, it's the little guys that are going to hurt the most. So the inflation story is not done. We're going to heal a lot more. But as far as today goes, guys,
stop either. I mean,
until it actually raises.
Well, until they get the interest rates up to a level where it starts to change the scales, and they're not indicating that they're going to shock. I mean, I know there's some people. I know you and I have debated this. The Fed likes to broadcast it. I personally think 50 basis points in March might be the good way to kick it off. Instead of it's like I'm not a fan of ripping off the Band-Aid and just toppling over the apple cart and saying, all right, you guys clean up this mess. That's not rational either. But to do
I mean,
so
at 40-year highs,
it hurts.
Yeah, I mean, at 40-year highs and 1 year into the presidency with some of the lowest approval ratings we've ever seen, particularly for the economy, not good. Not good. Yeah. So that's where politics is getting involved in it again. So at this point, I mean, it's going to be very, very interesting. Like I said, they've been complaining, inflation. So I don't know. I would say though today, guys, look for these, look for pullbacks. We're seeing, price drive up again. For the most part, I mean, rising interest rates is not going to be good, but it's something that's needed. The economy is obviously firing on all cylinders. This number, it's green. That's obviously great for interest rates. But again, what it's showing me right now is, yeah, the economy looks great. We know they're going to raise interest rates. That's starting to get baked into the market. But we got 2 months, so we got happy days for 2 months.
And
I would look for pullbacks.
Then, if they do 25 basis points, I mean, in the grand scheme of things, 25 basis points.
It's nothing.
It's nothing. Even if they did a triple, or 50 basis points, 0.5%. You start getting there. Historically speaking, we are at all-time low ever interest rates.
I don't think it's. I think at this point, everybody likes the free money. I don't think we're ever getting back to what the historical averages are.
Right. We're not going to go back to 13% or
no. I don't think we get up to 5 or 6. I think at this point, everybody's mentioned now that they think the low rate environment is what the new norm is going to be,
and that could be. But we could come off of 0, and if we went to 2 or 3%, I get it.
Yeah, I'm thinking 2 or 3 is probably where it's going to be.
It's something, but these first raises to go from 0 to 0.25, even from 0.25 to 0.5 or 0.75, it's still free. I mean, it's
basically
in
that's what
the
it
grand
is.
scheme of things. I mean, I think about they let someone like me borrow for my mortgage 30 years at 2 5/8. I mean, that's crazy.
It's yeah.
So, but it's to me that's free money, and that's 2 5/8. We're still for the banks and everything, and they're still down at 0. So.
Yeah, I mean, and again, it's not an environment that has worked either, right? Japan has basically had 0 negative interest rates for almost 30 years now,
right?
And they still are considered.
Changed.
Yeah. And nothing changed whatsoever. So, you're going to pay for it on the front end or the back end. So, I want to get everybody rolling along here, guys. This is NQ from yesterday. I think NQ will be particularly interesting to watch today. You guys will see we marked off this 536 yesterday. You can see right there that candle. This was the perfect setup yesterday when I talked about, hey, listen, expect the markets to get crossed from FOMC. We literally pulled right back up to that level. And there was a little bit of a spike through the top, which again, using Nadex, this would not have been an issue for you because, again, we have the upside protection. That's a lot of movement very, very fast, and that was expected, but it also gave us a racetrack. So let's say look for NQ to be able to kind of rally back up today to 14,536. Probably, pretty decent. And Tesla right now it's showing up from where it was. It's kind of mixed. It was a little choppy back and forth, but Tesla's showing to be up a little bit. And then again, Apple is already starting to move. And again, the earnings coming later on today, but Apple is also going to open up higher. So having those two in the move in the positive direction is definitely something that can help NQ drive. And like I said, a lot of people try to get into Apple, early on earnings days. I think that's going to be a driving force today, but I wouldn't really try to flip this or turn it at least until that time. And even then, I'd like to see a new top put in before I try to, get any profit taking in NQ. But I think NQ is the one to watch today. As you can see, it's up the most right now, and I think that probably continues through today.
And I want to mention, Apple earnings coming out after the close, and if someone were trading Apple or looking at the Nasdaq after the equity markets close, just tread lightly because some of those reactions after hours can be odd. Microsoft earnings, they blew out revenue, they blew out profits, everything was great, and after hours they pounded Microsoft into the sand, and they opened the stock the next day and it was $25 higher. So everyone was panic selling after some fantastic news, got absolutely decimated. So it's the liquidity after hours, when it disappears, you get some strange trading behavior. So just tread lightly.
And you're an options guy. You know all about the volatility crush strategies. And Apple is one of those ones that is stacked with volatility going into it. So.
100%. So because it's before the number comes out, fear, concerns, the unknown, volatility goes up. Soon as that is a known commodity, you see, and that's what we saw in the VIX yesterday after the Fed announced. Once we got the news, now it's known. All right, we know, we got the story, and you can adjust and accommodate accordingly. All right. Do we have? I think that's probably going to cover it for today.
I mean, like I said, overall, I think positive day today. Even with the dollar rising right now, the data today is just so good, showing us you think about a 7% GDP on a quarterly basis. Supposedly, 5 years ago, that was impossible. It'll never happen. And now we're throwing up sevens, even a year into a pandemic. And it is, some of this is pandemic recovery, but it shows that, again, everything is working the way that it should right now. So.
So perfect. With that, any questions for Nadex, please email us customerservice@nadex.com. Brian is also accessible, support@keeptradingsimple.com. You've got my email up there. You're on YouTube right now. Actually, you could be on Facebook, just so you're aware. The recordings from the boot camp on trading the stock market. If you wanted to catch some of those recordings, they're available on the Nadex YouTube channel. We did put them up last night. Again, just a recap for today. Dollar strength. We're seeing dollar strength. Of course, the Fed raising interest rates. We saw that, and it's creating volatility in the U.S. dollar. Gold and silver both getting hammered with that. listen, you got to store gold and silver. You're going to have to pay interest to do that. Whatever it is, they're non-performing.
You can put it under your bed. Just tell me your address first.
There you go. So yeah, gold and silver weaker. Equities all looking to open in the green this morning, just sort of stabilizing after a bit of a crazy week.
And core PCE price tomorrow morning, guys.
Yeah, tomorrow morning we've got
core PCE price index month over month, 8:30 tomorrow morning. Yeah.
So
gauge of inflation.
So yeah, guess what? We're having inflation.
We have inflation. Just if you guys didn't know, transitory.
I don't know one uses that word anymore. With that,
that was so 2021.
I love it. With that, Brian and I will catch you again tomorrow morning. Thank you so much for joining us, everyone, and good luck in the markets.